screen. Make sure everybody's got it. You're on mute, Liz.
Liz, you're still on mute. Okay,
That,
can you hear me now?
yeah. Yeah, that's better.
Perfect. Right, let's see if we can share this screen. There we go. Okay, perfect. Can everybody see?
I can't see people, just bear with me. Can we have some thumbs up if you can see the presentation, please? Is that okay? Brill.
Lovely.
Brill.
Great. So thank you, Tracy, and team for the introduction and for inviting me to share some of the insight that I have on the world of flood insurance. My name is Liz Mitchell. I'm founder of Flood Assist. I'm a veteran of 29 years in the insurance industry. Most of that time spent for big household organisations and names in areas such as working areas such as commercial and product development and underwriting. So it's a market that I've spent a very, very long time in. 6 years ago, I took the plunge literally to set up my own broking business from my spare room with just myself. And today I run a team of six specialists, all experienced people. We're not a contact center, we're not 21-year-olds with spots, but we're a highly sort of technical team, and our sole speciality is in ensuring predominantly high flood risk homes. My passion for flood goes deep. I don't think you could do what we do without caring. And one of my favorite interview kind of like scenarios is explaining some of the situations that our kind of clients go through. And I always say to people that want to come and join the team that you cannot do this without caring and without having a heart because of the very nature of what we support people going through and the stories and experiences that they share with us. But my passion for flood, I grew up on the Thames. I've still got family that live on the Thames in high flood risk areas. And I'll be honest with you, I'm also at my happiest when I'm rowing a boat, which is what I'm doing when I'm generally not working. Insurance is never something that anybody ever enters into by choice. We are pretty much one of the most, along with estate agents, one of the most unpalatable professions in the UK. One of the things I've learned on my journey is that when you add the word flood into the people have an inherent distrust and dislike of many people in our world. But hopefully today, I'm going to show you that there are some good guys out there. I'm very much going to be focusing on covering some of the common scenarios that we as a team see, and aiming to demystify some of the common misconceptions that we see as well, and how to navigate the world of flood insurance. So, we're going to cover off some market context. There's been a lot of changes in the insurance market over the last 24 months. Quickly cover off how insurers assess flood risk. And as Tracy said, a high level view on FloodRe and how it works. I'm going to hopefully share some top tips for keeping insurance premiums to a low and look at some of the common pinch points and where we see things typically go wrong. And hopefully these will cover off a number of elements that everybody has raised in the questions. So, what is insurance? It's a promise to pay a claim. It's what we call a risk transfer mechanism, where a client will pay a premium for the certainty or the hopeful certainty of a claim being paid. As I say, so a risk transfer mechanism, a promise of kind of certainty. It's a contract, legal contract. It's a period generally of fixed of no more than 12 months with the insurer and the insured also having no obligation or need to ever offer cover at renewal. One of the things I wanted to cover off really is the subject of a lot of people that we see think insurers really should pick up the bill for flooding. And I kind of liken this to a very different situation. I call it, refer to it as food poverty. We never really look at people like Tesco's or Sainsbury's to kind of fix the problem of food poverty. Insurers, just like every other commercial organisation, are there to kind of make money. And as much as it sounds very cold-hearted, they're entitled to make money because no organization can exist if they don't make money in the first place. I think what we've all seen over the last, certainly for me, the last 5 or 6 years is the increasing frequency of storms and major flooding events. We all know that this situation is not getting any better. And On that sort of side, I always view, for me, insurance as one of the many tools in your, I call it an arsenal of tools that you can use to effectively sort of fight your flood risk. But as I say, ultimately, at the end of the day, insurers are businesses. And they have to put a return, just like Tesco's or John Lewis, they have to put a return out there for their shareholders. Insurers' appetite for flood risk. In the 5, 6 years that we've been trading, we've seen a massive, massive change in this. So when we first started trading about 5 or 6 years ago, we were able to still offer cover to people outside of the government scheme FloodRe. As I say, over the course of time, we've seen insurers just not want to take a risk anymore. To put it into kind of context, the average flood claim at the moment sits north of £50,000, which is a lot of money. Insurers actually don't make a lot of money, and I'll talk about that in a sort of second. So for us at the moment, the majority of what we do, I think about 98% of our clients are insured through the government back scheme. And that's not really for any other reason than, if we had insurers that would be willing to insure properties outside of FloodRe, we definitely look at that as an option. But the reality is there just aren't that many insurers that want to do that anymore. In terms of one of the things I wanted to say was really about a lot of people think the insurers are making a lot of money, and the next 2 points really cover that off quite nicely for me. In 2022, for every £122 paid out in £122 paid out in claims. Insurers only, well, for every £100 received in premium, insurers paid out £122 in claims. That situation didn't really get much better in 2023. For every £100 in premium that they received, they paid out £118 in claims. Now, these 2 cumulative years of really bad performance for insurers led to what we saw, a lot of rates or a lot of premiums going up. So in October 2024, premiums rose 5% just in 3 months, a 3-month period. And at that point in October 2024, they were 32% higher than 12 months prior and 56% higher than 2 years prior to that. So we've seen premiums increase a lot in that period. And it does for lots of different reasons. We saw through COVID, we saw a lot of increase in the cost of raw materials for repairing buildings. We've also seen quite big spikes in certain types of claim. Escape of water, that's when water leaks from a pipe or something inside your building. Those claims have gone through the roof as well. And of course, there's been a lot of bad weather, be that windstorm or be that flood as well. So there were some of the reasons that insurers put their premiums up significantly in that sort of period. It's almost been like a perfect storm, by very virtue of the fact that a lot of FloodRe customers pay a bit more for their insurance, and then they're double whammied with even more what we call premium or rate inflation kind of coming through. But these were all circumstances that were very, very much out of people's control, and they were applicable to everybody in the market, not just if you have flooded. Also for us, I think as I kind of touched on, freak weather and occurrences are really now the new normal. If I look at the first week in January, within the first 6 days of January alone, we saw two big, well, not big, but massive big, but we saw two big flood events coming in, and that's how we started. I think there was a windstorm in as well. So as we're all aware, these things are not the freak occurrences that they may well have been. If we look at the events of 2015 that hit Cumbria and a lot of the north of England, that's kind of becoming more the norm. And as I say, I don't think that's going to change anytime soon from what we're seeing. I wanted also to cover off how insurers assess flood risk. Again, massive area where we see a lot of people misinterpreting or have been misadvised. First, the other one is start with what is a flood? Well, a flood, sometimes you'll see it in your policy wording. Sometimes we'll have a technical, what we call a technical definition, but generally it's a sudden ingress of water from the outside of the building to the inside of the building. And that can happen at ground level, or it can happen actually below ground level. As to sometimes people confuse what we call escape of water. That's water leaking within your home, but a flood is generally water from the externals to the internals of your home at or below ground level. Lots of different type of flooding that we see. Surface water probably being the most tricky at the moment, and that can be from as random as a blocked drain or a culvert, through to a farmer ploughing his field in the wrong way. It's very difficult as a type of flooding for insurers to understand because it can be that random. As an example, Storm Babette wasn't your typical type of flooding, and many areas flooded that were never even predicted to flood. Some of the smartest insurers out there in terms of understanding flood modelling had got pretty much all of their claims outside of the government scheme. What's easier for insurers to predict is rivers and seas flooding, because it's easy to model. You can see the topography of the land, and it's fairly sort of predictable. But as I say, at the moment for us, for a lot of our clients, surface water has been the biggest challenge. I also wanted to touch briefly on groundwater flooding. We do get a lot of inquiries around that, and as far as we see it, there are two types of groundwater flooding. One is a slow and gradual change of the water table, and that can happen over many years. You tend to see that in chalk called porous soil, porous rock areas. The second type of groundwater, which is more commonly seen, is where the water table changes suddenly or more rapidly. So quite often you'll see groundwater in areas where there are basements or cellars. So we got a lot of clients in Hebden Bridge, and we can all see on social media that their cellars tend to kind of go first. Groundwater for us is only coverable where it's sudden and identifiable, but insurance as a whole never would cover what we call a slow and gradual change over any point in time. Some policies include groundwater flooding, some policies don't. If you do suffer from groundwater, just make sure your policy wording does cover groundwater. FloodRe, just independently, just to put a note, FloodRe will cover groundwater flooding as well. When is a home flooded? Oh gosh, I've had people say to me they've had water underneath their home, but they've never flooded. Now, generally speaking, an insurer will constitute a home to have flooded when there is water in the grounds and the gardens of the property as well. And that's generally because your home insurance doesn't just cover your buildings, but it covers the whole of your property, including its grounds or its kind of gardens. So that would be generally the rule of thumb as to when as a home flooded. Be careful if you're ever asked, has your property ever flooded? If in any doubt that you don't quite know what an insurer means by that and you're looking to take out a policy, call a human and let them make that decision for you. But generally, it will be if there's been water in the grounds or the gardens of the home. We see quite a few people fall foul of that one. Not with us, but with clients that come looking for help after they've probably had a little bit of a rough time. What questions do insurers ask in relation to flooding? It all varies. As a client, you're always obliged to answer the question that you're asked. And we have a principle here also that you can only answer something to the best of your knowledge and your belief. It's one of the fundamental principles, as I say. I mean, for us, we ask lots of different questions. Because we have lots of insurers that look at things in a different way. The most common one we'll ask, though, is, has your property ever flooded? Has your property, including your grounds and your gardens, ever flooded? And then sometimes for some of our insurers, notably an insurer called AXA, has your property, including its grounds and gardens, anything within 50 metres flooded? So always just take care to make sure that you read the question properly. There's one or two insurers that actually don't ever ask if you've ever flooded. There's not many of them. RBS is one of them. I'm pretty sure, given some of the claims that they've picked up over the last sort of 12, 18 months, that will be set to change in the future. What data do insurers use to assess flood risk? Okay, a lot of challenges on this one. A lot of people come to us and say, my house is not in a high flood risk area, or my house is put into a different zone according to the Environment Agency. So a lot of people use the Environment Agency data as the Bible of whether they are a flood risk or not. The reality is, though, from an insurer's perspective, they use data that goes well beyond the sophistication levels of what you see from the EA. So they'll use company data such as that from RMS or JBA or Ambiental. Quite often, actually, insurers will use multiple sets of data to assess flood risk. These data sets aren't generally available in the kind of like wider domain, so you'll never see the data that they use. But as I say, the investment that insurers have made in recent years has been significant, particularly around surface water, where a lot of the data companies are working hard to try and model surface water flooding and try to assess that in more detail to help insurers make the correct decision whether they're going to accept a risk or whether they decide to include that property in the FloodRe scheme. I'm not saying there wouldn't be an element of data that insurers don't use that's a, an Environment Agency asset. One of the ones that they definitely will generally pick up on is the what we call the recorded flood outlines. That will be something that they will use, but very, very, very few. In fact, I can't really think of anybody will use just Environment Agency data alone. It goes well beyond that now. And I don't see that the sophistication, the level of data that they'll use will get any less kind of complicated. I think it's also important to remember that insurers quite often now what we do rate at what we call full risk address level. And a lot of people go, well, there's been flooding in my postcode, or they just look at it at postcode level, which and a postcode can cover 20, 30 properties. They don't. A lot of insurers are moving to what we call single address rating. So they will look at the flood risk or any other risk actually, such as theft or storm data at full address level. So your specific house they will be looking at in great detail. That's the level of sophistication that they go now. There are insurers that will broad brush it. I can't say that there aren't, but a lot of them are moving towards what we call full address rating. Who and how do insurers interpret flood data and other information about flood risk? And this I put on here because it comes up as a kind of a bit of a controversial point. Insurers tend to make decisions based on data. They make them not in isolation. They don't sit down and review every postcode, but they review it kind of en masse as it were. A lot of underwriters out there, and we don't do everything, not everything that we do. We don't, key into a computer. A lot of our risks, because of the very nature of the thing that we do, are assessed by an individual. But if you were asking an individual underwriter at an organization to go out there and interpret an FRA that you may have, or to try and understand the value of property resilience measures, they won't have the ability to do so. They don't have the knowledge necessarily and the understanding to make decisions based on specific and individual sets of circumstances. And I think a lot of people go, well, why can't they do that? And that's just because they're not resourced to do that. They're not trained to do that. And they don't know how to interpret that data in the way that I think a lot of people would like them to do. Final bit on this one: does PFR make a difference to an insurance premium? Currently, no. And the reason is that I'll be honest, there is very little appetite for insuring a high flood risk or a previously flooded home outside of FloodRe. We'll talk about FloodRe premiums in a minute, but at the moment, I think until FloodRe start to incorporate PFR measures into their own pricing, I don't think any policyholder is going to see any sort of discount as part of FloodRe's transition through the implementation of things like flood performance certificates. I think in time we will see PFR measures making a difference to kind of premiums. But at the moment, because most flooded people or most people in really high flood risk areas will be straight into the government scheme, the premium for flood doesn't take PFR measures into account. But to my prior point also, it's very difficult for insurers to understand the value of PFR, and that's part of some of the projects like the DEFRA Roundtable implementation of FPCs, is how do we assess and put a value on PFR measures, and that's, I think we're still quite some way off of doing that. I wanted also to pick up on some common points of contention very quickly here. My neighbour is, oops, apologies, should be saying paying significantly less than I'm paying. Always remember that your insurance policy isn't just based on your house, and your house can be identical to that next door, but the flood risk and actually other types of risk can be different. But your premium is also set by the occupants of the home and their contents as well. I think the other sort of side is you never know really what your neighbour has also told that particular insurer. So you can't compare a set of semi-detached houses and expect them to say to be paying the same amount, firstly because the occupants are different, the risk is different, and as I say, the information that might have been shared would be different too. Someone has made a flood claim in my postcode and I'm now paying for it. Insurers really aren't that clever. There isn't a single database that exists for flood claims. Insurers do share claims information, but that'll be more general things, and that is generally in the form of what we call anti-fraud databases. There's a couple of those that insurers would all subscribe to. But they don't talk to each other because they're competitors. They don't like talking to each other. And I wish they would talk to each other more, actually. I think there's a lot to be learned from collaboration here. But they would never know necessarily if you had made one of your neighbours had made a claim. My property flooded, but I didn't make a claim. I think this goes really much back to answering the question that you've been asked. And generally that question will be, has your property ever flooded, rather than have you made a flood claim. It doesn't make a difference if you haven't really made a claim. You still generally will be obliged to tell the insurer that your property is flooded. Again, back to the point, what is the question that you've been asked that you need to kind of answer? But whether or not you've made a claim makes no difference. And also, certainly from a perspective of FloodRe, it doesn't really matter what size of claim that is, and it doesn't really matter how many claims you've made as well. We regularly see claims that run into a couple of £100,000. So the size of the claim and the number of the claims under the FloodRe scheme, and I'll cover that briefly in a minute, doesn't make any difference to kind of like a FloodRe premium. They wouldn't have built my house if it was in a high flood risk area as well. I think this is a bone of contention. I'm pretty sure that Tracy will echo me heavily on this one. It'll be interesting to see also where we go with the new Labour government and their housing development plans. They can and they do develop in high flood risk areas. There is a complete breakdown between passing an approval of planning applications and properties being insurable. Insurers will know if that is a high flood risk area, and the chances are that they will not offer cover. Plenty of houses are built with raised elevations or PFMR measures, but and they still flood. They still flood. So they do, and they will continue, I'm pretty sure, unless something changes. And again, I think this is one of the mantras of FloodRe are looking to support, is to how do we stop people building in those high flood risk areas, especially with the growing pressures on to build more houses under the new government. My home will never flood, or it will never flood again. It definitely does. I think that's all I can say really on that one. We have, bless them, some people that have flooded every year on the YN7 for the past sort of five years. It just because it hasn't happened, it doesn't mean that it won't happen. There are plenty of people, as say with Babette and some of the more recent storms, that have never never flooded. And will they flood again? Yeah, they do, and they can. As much as I'd always like to believe that, and I think from our perspective, we always hope our clients never flood again because it's pretty awful. They do. They do tend to flood, and they can flood again. So looking at FloodRe, Tracy, if I go too much into this, then please kind of pull me back. FloodRe is the first scheme of its kind in the world. It's what we call a reinsurance scheme. And the simplest way to think about that is it's insurance for insurers. It's a scheme that's owned jointly by the UK insurance industry. It's underwritten through sort of legislation, but it's what we call a reinsurance scheme. So as a client, if you have a FloodRe policy, you never really deal with FloodRe. You'll only ever deal with your insurance. What it enables insurers to do is to offer cover to people in high flood risk areas that are flooded. And in the event of a claim, to recover the money from what we call a centralized fund. I think there are plenty of countries out there, Australia, a lot of Central Europe that have suffered extensive flooding that would kill for a scheme that we have. It is the first of its kind in the world. Can you buy a policy that only covers flooding? Not for a domestic home, no. So FloodRe, I think a lot of people think FloodRe is just a policy for flood. It's not. So FloodRe is FloodRe, what we call a FloodRe seeded policy. One of the rules of FloodRe is that the policy that you sell to a client or you provide to a client, it has to be a regular and a standard home insurance. So actually it's it could be a policy by Admiral, it could be by GIS or by AXA. It's a normal insurance policy, and you would buy the same type of policy if you were not a flood home. It's, as I say, just think about it, going back to that insurer just uses the reinsurance scheme to recover the flood claim if they need to pay out. So it's a normal insurance policy, just like any other. Are all insurers part of FloodRe? No, they're not. All insurers pay a levy to FloodRe, but not all insurers will sign up to FloodRe. It isn't something that just like they do by default. They have to go through a whole load of regulatory red tape and paperwork and sign up to the scheme. So not all insurers are part of FloodRe, definitely not. I think sometimes we see a lot of frustration with people that go onto the FloodRe website and look at the find insurer. A lot of those insurers don't offer new customers quotations. Quite often they'll just use it on their existing clients on that sort of side. Who is eligible for FloodRe? I can happily share around afterwards some notes on this. There's some good links on the FloodRe website. Generally, there's a little bit more to it, but generally it's available for homeowners where it's their primary, their main home, or their second home, but they own or occupy it, or it's an unoccupied policy for properties that were built pre-2009. And those are the high level guidance criteria that I'm going to stick to today. There are lots of other little nuances within FloodRe. If anyone wants to check whether they're eligible, have a look at the scheme or give us a kind of call. But generally, primary and secondary was built pre-2009. So who
Liz,
decides the policy is included in FloodRe? And I think
Liz,
there's a lot of yeah.
Liz, sorry, I was just going to say I've got a couple of questions specifically on
Sure.
FloodRe. Should we do them now?
Yeah, let's do them. That's great.
So we've got one from Irene, who lives in a purpose-built mansion block consisting of
Yeah.
13 flats in London, of which we
Okay.
know there's an awful lot of that type of property.
Oh my
But
God.
of
Yeah.
course, they're excluded from
Yes.
FloodRe as they're considered commercial. Um,
Yes.
the question is, what are people who live in these buildings meant to do, especially as leases demand that insurance cover must be provided? She
Irene,
also
firstly,
says that
yeah,
they had terrible flooding in 21 and I
yeah,
think
July.
2002. Yeah, yeah.
Yeah, no, no worries at all. So, yeah, I mean, small blocks of flats are eligible for FloodRe. but the block must be less than three individual units, and the freeholder, one of the freeholders, must live in the property somewhere all of the time. And we try to raise this with FloodRe, and it was in their what they call their quinquennial review, their 5-year review. Um, the reason it was always set to three is that FloodRe only ever wanted to cover what they call converted houses, which generally a lot of homes outside of London, granted, that are the converted houses are divided only into, like, number two or three sort of flats. The reason that they won't, I don't know why they won't consider it. It is generally classed as a commercial risk. I think part of this is to do what we call freehold and a freehold leasehold situation, and also common hold. Because I mean, if your flat was in Edinburgh, you would be operating under a principle of what we call common hold, and you could insure your own flat, which is incredibly frustrating. So actually, you could insure your own bricks and mortar, your own buildings underneath that. I mean, you are eligible, assuming that the flat was in existence pre-2009, you are eligible to cover your contents underneath that. So just be aware of that one too. One of the things actually, Tracy, Mary and I were covering the other, or one of the other acquaintances I have, not sorry, one of Mary's acquaintances, was that I think tied up with issues around things like cladding. I think there is a possibility to look at moving away from what we call a leasehold situation in England and Wales to more of a common hold situation, which would kind of fix the problem. But what do people do? I really don't know. I mean, I do think it's a massive gap. We've highlighted that to FloodRe. My advice would be shop around, try the Beaver website. And if you've got flood cover, even with a large flood excess on it, you can always insure your flood excess. But it is a massive, massive black hole and a gap for people that exists. As I say, if you're in Scotland, you'd be able to fix your problem in a heartbeat. And it feels very unjust and unfair because of the legal requirements to insure it under a freehold leasehold situation, that people in England can't benefit from it. Yeah, it's a difficult one, Tracy, if I'm really honest, because it's very, very hard to find cover. We don't really have anyone where we have historically been able to do things. The premiums have been so unaffordable, running into tens of thousands with massive excesses on as well, that they're really not, the policies really aren't worth the paper that they're written on.
Um, there's another question, which is what happens if we are not eligible for FloodRe?
Oh, again, I'll probably shake my head in frustration because I think, Tracy, we talk about this anyway, don't we? Um, there are the odd insurer that will look at thing, but as I say, look at risks that way. Um, but again, I think there is an increasing number of people that go uninsured, or if they do find cover, it's very punitive kind of terms and conditions. I think all you've got to do is try as many providers as you can. But back to my point, we used to be able to do a lot of this stuff, and we can't now. The best thing to do is, if you do, as I say, if you do have cover, even with an excess, is do not let go of it. A lot of insurers, will do the right thing and hold on to a policy. They might increase your flood excess at, year 2 or year 3, but what we always advise is never let go. I think there's a lot of work underfoot to try and raise the awareness that there are a growing number of people in this sort of situation, and most of them will be through no fault of their own. Generally, it could be a risk that no one is aware of because you can't see it. You would argue that a layman buying a home would never, unless there's a river right next to it, would probably never even consider that they might have a problem with something like surface water or the like. So it is very much a black hole, and even for us, we struggle to fix it.
There was a debate, I think it was yesterday, in the House of Lords regarding FloodRe. I will, if everyone's interested, I'll post a link because it was talking
Mm.
about the different changes that they might like to make to FloodRe and the scheme. So I'll pop a link in the email that follows on afterwards. Okay, Liz, right,
Yeah,
you get back to it.
lovely, thank you.
Thanks.
Who decides whether policy is included in FloodRe? It's not FloodRe who say whether your particular home should go into the scheme or they're not. They put the overarching kind of criteria that you must be built pre-2009 and it must be your main home. But it's actually up to that individual insurer using their data to assess that flood risk, whether they view it's too high for them to accept in their own right, and whether they want to include it into FloodRe. It's not FloodRe who say, number 44, Jordan's Close has to go into FloodRe. It's the insurers that decide. So sometimes what you'll find is that one insurer will want to include you in FloodRe and another insurer may not. I mean, over the course of the time that FloodRe's been in existence since April 2016, there have been over 500,000 homes insured in the FloodRe scheme. The current number that are insured are roughly just under 300,000. So there are lots of people that one year might be included in FloodRe, they might shop around and find a different market, and the next year they may not be included in the FloodRe scheme, but it is the insurer that decides and not FloodRe themselves. How do you know if your policy is included in FloodRe? Well, if you're lucky enough, you might get a bit of literature saying that you are. Generally, the best way to tell is that the flood excess is normally fixed at £250, and that's quite a giveaway in most most circumstances. Generally, if you have flooded, you probably will be in FloodRe anyway. We quite often tell by generally the premium that someone is paying. I always kind of say if it's double what you used to pay, then you're probably in FloodRe anyway. How are claims handled in FloodRe? Back to the point, you don't get your claim handled by FloodRe. Your insurer will handle your claim as per any other claim. And it's only when that the insurer has finished settling the claim and they've paid out all the money that they look to then recover that cost from the FloodRe scheme itself. So you will go through a normal flood insurance journey for that insurance. So when it's settled, then they will recover the money from FloodRe. The next one, gosh, I could talk about this for ages. What happens, and I'm sure we'll cover this in the questions, what happens when FloodRe ends? So FloodRe was put in place for, I think it was a period of 25 years. It was only ever as a stopgap while we found, or insurers or the market found a longer term solution to underwriting or to insuring high flood risk properties. What will happen when it ends? I think FloodRe very much give the external impression that it is, and they're acting with intent that it will come to an end. From our side, I very much believe that if you have an effective scheme that works like FloodRe, if it's not broken, then why fix it? The one thing I can pretty much guarantee, though, is that insurers will not want to insure properties suddenly, all of a sudden. Over the course of time, what's supposed to happen is we're supposed to make the UK's housing stock more flood resilient and resistant. That what will happen is the hope that what will happen is that insurers will want to start to insure these properties again. The reality is, though, guys, I'll be honest, I don't think they will. Even the most flood resilient homes can still sustain a lot of damages. I always say homes are like tea bags, or it's like splat the rat, which is when you think you've got it from one direction, it will come in from another. I don't also think that I think as we move nearer to 2039, I think you'll see an increasing amount of voice from those insurers that are big subscribers to FloodRe, so the likes of AXA, Aegis's of the world, the Admirals, and so there'll be an increasing amount of pressure put onto FloodRe to make a decision on what they are going to do. I think there's more call to extend FloodRe, both in terms of its tenure, but also in terms of the scope of the properties that they look to kind of cover. I would probably bet a lot of my lunch money that the scheme will continue, but that will not be the message that you will see from FloodRe. It's not broken, so why fix it? And it works really, 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 really well. But I don't see this suddenly being in 2039, insurers all scrambling to want to insure these properties. Bearing in mind that they've got another few quinquennial reviews, their 5-year reviews to go through. I'm pretty sure that we're seeing good time before FloodRe looking to end. It's not going to be a week before they decide to extend it. They're going to have to manage that. as to what they ultimately will do. But the message that you'll very clearly see from FloodRe is that we are going, because that was the mission and the objective that the scheme was being set up. The reality is, I don't think it will. I think a lot of people within the world that we work in, be insurers or be in the world of wider world of flood, believe that this scheme cannot really go anywhere. Insurers are not going to want to start and do this again. Build Back Better, I'm going to not say too much about this. Not all insurers, I think, to be aware, not all insurers are part of what the Build Back Better scheme. So the Build Back Better scheme was launched by FloodRe, I think, about 2 years ago. Again, not all insurers are subscribed to Build Back Better, but Build Back Better was again part of this transition back to into 2039 of what we call risk-based pricing. That FloodRe will award, or the insurer will award, up to £10,000 worth of measures to protect your home. One of the things that people aren't aware is that insurers set the criteria at which Build Back Better will kick in. So, for example, some insurers might say you've got to have a buildings claim of more than £10,000. Some insurers will say you've got to have a buildings claim of more than £25,000. So the insurer sets the rules of when Build Back Better kick in. Again, it's not something that's dictated by FloodRe, but there are all sorts of different rules. I think we saw another insurer recently go live, a company called Penn. Their rule set is you must have a claim of more than 10,000, but you must have flooded before as well. One of the very strange things that we find, and perhaps a little bit disingenuous with FloodRe, is that the insurer will be obliged to pay for Build Back Better on a policy that hasn't actually been included in the FloodRe scheme. So they don't just insist that Build Back Better is available on pre-2009 or FloodRe eligible homes. But if it was, say, a flood that happened on a brand new build in Storm Babette, and it was underwritten by the same insurer, then they would still have to contribute that up to £10,000. So the amount isn't always 10,000. All of our insurers are 10,000, but we have different thresholds of claims that kick Build Back Better in. So if you are looking to try and understand that in more detail, just make sure you ask your provider. They'll probably scratch their heads a little bit, but they should be able to come back to you to say what thresholds are for BBB on that sort of side. Would you like me to cover that in any more detail, Tracy, or are you okay with that?
I think that's fine, Liz. Thank you. Because, like I say, we will run a
Yeah.
session just on FloodRe and Build Back Better.
Okay. So in the essence of time, just looking away, because I'm never sure what's something to say on flood insurance. One of the things I wanted to kind of demonstrate was, and this is probably around managing people's expectation of premiums when you go into the government scheme. So the premium for flood is set by the council tax band of the property. So the council tax bands are displayed here, and underneath them are the respective costs of a buildings in policy, the build or the flood component of your policy for buildings, for contents, and then buildings and contents combined. So flood reset those premiums. Insurers, what we say apply what they call a claims expense to these premiums fairly often. So insurers can't recover all their claims costs from FloodRe. They can recover the cost of actually physically repairing your home. Where they've appointed surveyors or a loss adjuster, they can recover those fees, but the internal claims handling cost by that claims handler cannot be recovered. So most insurers will apply what we call a claims cost expense to those premiums on that sort of side. Couple of myths here. Your flood excess under FloodRe is always fixed at £250, and you can claim as many times as you like. That will never change. The other good side, and probably the most notable one, is you can claim as many times as you like, and your FloodRe premium will not change either. And sometimes I think we've got a lot of people that multiple flood, they're pretty amazed by the fact that their premium doesn't really go up when they need to make yet another claim. And quite often, people will say, I'm not going to make a claim. We go, well, this is why you've paid your premium. And actually, that's not really going to affect your flood premium. You're not going to go to a point that you're going to pay, another £400-500 because your flood cover is fixed by your council tax band. It doesn't matter how many times you claim, doesn't matter the size of your claim. Your flood premium remains the same. Point to note, though, FloodRe premiums are reviewed annually. They are about to go up on the 1st of April by about 10%. So these are the new premiums with effect from the 1st of April. There was a similar increase last year of around about 10%. So the FloodRe premium your provider cannot control, that is fixed by FloodRe. As I say, FloodRe happens behind a normal home insurance policy. Now, the rest of the cover is the premium for that, for things such as fire and theft and storm, all set in the normal manner as they would be for a regular home insurance policy. So your FloodRe premium is fixed, as you can see, for a band AB house, anything ranging from £200. God help you if you're a band H, because you definitely want your home re-rated to a band G. Band G's being 528.64, including what we call insurance premium tax. So yeah, for anyone that's unfortunate enough to have a band H home, try and get your house rebanded on that sort of side. But hopefully that gives you a kind of context of premiums and why they are perhaps, you know, a lot more than what your regular Joe public would pay with a non-floody home. Okay, top tips for keeping premiums to a minimum. We all, as I said, you know, right at the outset, premiums have gone up significantly, and that is nothing to do, you know, generally with the fact that you've got a flood risk property, because the flood risk premiums have been pretty static, a 10% increase on that, which is quite minor, really, given the amount of increases that we've seen in the market. So a lot of people are going, you know, this is really, you know, as much as flood risk is supposed to be there and to be affordable, it's still expensive. So what are the things that you can do? Now, with any of what my suggestions are, there will always be an element, what we call of you taking back some of the risk. So if you can make choices around the covers primarily that you choose to place, but obviously that what we call transfer some of the risk back to you. First advice, shop around, but please check the small print to make sure flood cover is included in your policy. If you go onto a price comparison site and you see someone that might be half the price of anybody else, please just check that you've got flood cover. We do see a number of providers provide prices online, and then in the small print you've got no flood cover. I've seen plenty of people fall foul for that. I think it's a practice that we as an industry need to change, you know, because it's human nature that not everybody reads the small print. You can remove any additional covers such as legal or home emergency, and again ask your provider if that is something that you can remove. Again, that will save you a bit of money. You can add a voluntary excess. So this is the part of the claim that you would pay yourselves. Be careful on this one. We tend to find that if you add more than sometimes £200-300 of voluntary excess, you don't actually get any benefit premium wise for taking some of the or taking an increased excess. Don't also forget that your flood excess is fixed. You can't change that. Loads of people would love to change their flood excess, but they can't. If you're in FloodRe, it's fixed at £250. But as I say, that comes with a trade-off. You'll get a premium saving, but in the event of a claim, you might need to pay more for that yourself. Removing accidental damage cover to either the buildings or the contents or the bow. So common things under accidental damage, if you look at buildings, I would say cricket, balls through windows. These would be accidents to the fabrication of the building that you do yourselves. In relation to contents, think about that as either you drop an iPad or you spill wine on a carpet. So those are unforeseen accidents that you do to the property by yourself. That can save you quite a bit of money. You could also look to make sure that you don't cover any items away from the home. Now, obviously, if you need cover from the home, you're gonna have to keep that. But standard, your home insurance only covers you for items when they are at your property. If you want cover for items away from the home, that can save you money. But again, you know, think about it. If you lost your stone from your ring when you're away from home, or your bike was stolen, are you happy to carry that risk yourself? Worst case scenario, and the final drastic measure, I would say, is just cover your buildings. Now that's from a flood perspective. A lot of our clients are only interested in insurance for the big things. If you live near a river and you suffer from fluvial flooding, quite often you will know that you are going to go, in which case you can move your stuff upstairs. But a lot of people from my side need to probably understand that a lot of the cost of a flood claim is on the buildings itself. So your buildings would cover you for well, I suppose stripping out, but also things like if you've got a fitted kitchen, integrated appliances, or you've got hard flooring, they're covered under your building. So a lot of a flood claim can actually be attributable to the building sort of side. as I sort of say. The other side of by just covering your buildings, your alternative accommodation costs are linked to your what we call your building sum insured. They're typically around about 20% of the amount of cover that you have for your building. So if you've got a policy that covers 1 million, you'll get 200,000 of cover. It's really important that you maintain alternative accommodation kind of cover. So just cover your buildings. If you can afford to do nothing else, cover your buildings. It's amazing how many people will step in with replacement things. A lot of goodwill happens in the event that communities are flooding. Things I think you shouldn't do. Not take out cover in the first place, because it can and it does happen. Flooding, as much as you might think you can keep the water out of your home, I've seen plenty of people that can't. So not take out cover not take out cover at all. That is, oh, sorry, blimey, bear with me. Sorry, guys, I think it's getting late in the day, isn't it? So don't not take out cover at all. So remember, your policy can cover things like fire or storm. We've seen a couple of clients suffer major fire damage, and they've not been things that they've done themselves. In both occasions, actually, they've been fires that are spread from a neighbouring property. So if you didn't have any cover at all, it's not stuff that's necessarily within your control. You might not set your house on fire, but something else might happen. A truck might drive into your building and cause you massive structural damage. So think about it. It's not just covering for things that you can control. It's other things that are outside of your control. Yeah, removing flood cover, we've just by virtue covered that one off. I advise probably never to kind of do that. Sometimes we see structural issues as well on houses that tend to flood. I've seen a couple of cases where subsidence has happened, or ground instability has happened because the house is sitting in soggy foundations. So in the situation that your house subsides as a result of the flood, it will go what we go back to what we call the proximate cause, the original cause of the claim in the first place, which if it was caused by a flooding event, you'd have no cover for things like subsidence. Never underinsure your buildings or your contents. Underinsurance is a really, really big problem throughout the industry, where underinsurance is generally discovered isn't necessarily if you make a £500 claim for repairing your glasses or losing your glasses, but where a loss adjuster will come out, and the first thing they'll do if in the event of a large loss is they'll check that you've got enough cover in place in the first place, so you've covered it, in your contents enough. If you got actually £80,000 worth of contents, but you've insured 40%, that you've covered the 80,000, and also that you've insured your buildings correctly. See a lot of problems with underinsurance, particularly on the sort of building side. A lot of people think they insure their building for 400,000, they'll get up to a £400,000 claim. And it doesn't work like that. It's what we call a condition, what we call the average condition. You need to, the policy will pay out proportionately. So, for example, if you have taken out cover for £500,000 on your buildings, but actually to rebuild your home would cost you £1 million, you'll get 50% of your claim paid. In the event of a flood claim, if your average claim is £50,000, you can be left with a massive, massive out-of-pocket kind of build. So just make sure that you've got enough cover on both your buildings and your contents, because you could be really in a sticky sort of situation around that. And the other side is around bending the truth. As much as insurers don't share flood claim data, they do a lot of fraud, anti-fraud. They subscribe to a lot of anti-fraud sort of measures. Sometimes, unfortunately, we do see that with clients, that we'll see one year that they've got £10,000 worth of cover, and the next year they've got 20. But I kind of always will say, just be truthful. As I say, particularly we see people that don't think they need to declare a flood claim. It doesn't matter what your flood history is now with FloodRe. If you're going to be eligible for the scheme, things like that don't matter. But always, always, always tell the truth. Plenty of people, unfortunately, have been caught out by that one. Not saying that people are generally dishonest, the great and good. Mostly are, because they want to make sure that the policy pays out at when they need it the most. Last thing here, flood insurance pinch points. Where do things typically go wrong that we see? Discovering you have no flood cover for flood when you need it the most. Typically, this is where someone's bought their policy online and they've got a flood exclusion in the small print. As brokers or providers, we are duty bound to make it pretty obvious that you don't have um, flood cover. But I think there's some work to do as an industry to kind of get over that. So it's quite a common issue. And normally, if someone says to us that they discovered that they had no flood cover at the point of a claim, we can tell you who that insurer would be. Incorrect or non-disclosure. This is about as boring as it is. Please read your policy schedule, your policy wording, and your statement of fact. Your statement of fact document is the details on which your information, on what your quote's based. So it's your name, your date of birth, your claims history, how many bedrooms are at your property. Do check your policy documents carefully. It is your duty to do so, to check that those documents are correct. And if you do find anything that's not right, then please tell your insurance provider, immediately. Under insurance and the average condition, that one we've just kind of touched on. If anyone wants any more information on that, please let me know. It's a little bit more of a complicated issue, but do make sure that you don't insure your house for the sale price. What we call a rebuild value is the cost. The amount it would cost your insurer, so not you as a builder or someone that's got mates in trades, to demolish your house, clear the site, rebuild it, including its footings and foundations. It would also need to cover things like VAT and professionals and architects. If you've got an older house or a grade 2 listed house, it is very, very, very common that your rebuild value will be a lot more than what your house is worth. But it's a really big problem, particularly in the world of flood. So please, please, please make sure you get that one covered off. If you're struggling to find flood cover, I think I would say that if you are a 3-bedroom terrace in Carlisle, it's pretty easy to hop online and get cover. If you are something like a thatched home or a second home or an unoccupied policy, or you've got a case where you've got unusual construction such as cob walls, or you've had subsidence in the past, if you deviate out of that sort of regular home, it can be quite difficult to find flood cover. And that's probably where a specialist will be able to help and guide you through that. There aren't that many non-standard, what we call non-standard insurers out there in the market. It's dominated probably by about 4 or 5. Sometimes people just struggle to find flood cover. They just don't know about FloodRe, and I kind of wonder how that is, because obviously my world revolves around it enormously. But some people just don't know. I think if you're not digitally savvy, you're probably still not aware. I know people like Mary do a lot of work on the Floodmobile, and FloodRe do a lot of sponsoring of events and community stuff to try and raise awareness. But I think a lot of people still struggle to find it. Properties that can't be covered by FloodRe, we've touched on that already, guys. There are a growing number of these. I don't find it fair. I think a lot of people are never aware of a flood risk, and we see a lot of people such as first-time buyers that kind of are almost stuck in a cycle where they can't get any cover on their home and they can't sell their biggest asset. But there are plenty and a growing number of people that can't be covered by FloodRe, notably post 2009 builds. If your policy is due to renew when you are in the middle of a flood claim, loads and loads and loads of this. Now, generally, it's very difficult if you are in the middle of a claim, or you have what we call an open claim or an unsettled claim, and your property is looking like a building site, to get a new insurer to cover you. If you are in the middle of a flood claim and your provider does offer you renewal terms, even if you do not like them, we always recommend that you try and take that policy, as long as it's including flood. Unfortunately, again, we saw a lot of people post Babette that when they came to renew, their insurer didn't, or they weren't subscribed, that particular insurer wasn't subscribed to FloodRe, and that insurer was not willing to offer flood cover. Sometimes we're able to help. We've adapted our policies and our process, and we've found an amazing carrier, an insurer that will help us. But we say, if you are in the middle of a flood claim and you have got flood cover for the foreseeable, even if you really hate your insurer, please stay with them. Use your 14-day cooling off period when you're back in your home, cancel your policy, and go and find yourself a policy and a provider that you're happy with. Large scale and multiple weather events. There are only so many loss adjusters and claims handlers in the UK. If you think about the last sort of 6 to 18 months, has been event after event after event after event. And it has been slow. A lot of reinstatements have been really slow. We could drag COVID into this as well, and said there were a lot of people, Worcester Y Way, sorry, 7Y Way, they got absolutely wellied with COVID landing in the middle of, them being reinstated. And it does make it tricky, though, as I say, for claims handlers to cope with the sheer number of claims that they could be managing at any single point in time. So we do see that sticky. Frequent flooders, as I say, if they're eligible for FloodRe, you should still be insurable. I think frequent flooders go through a lot emotionally. You can never underestimate the non-financial impact of your home flooding. It is well versed that it is equivalent to PTSD, and I've seen some of the most strong people, lawyers. I've got a barrister up in Borrowdale, and the strongest lady in the world, focuses on international law and would stand up in a courtroom and give you an absolute toasting. And the moment her house flooded, she absolutely melted. And I think it's really important for us as brokers, and I think as insurers, to remember that flooding is pretty awful. But when you flood multiple times, um, you are literally, and you can be terrified every time it rains. And they are, I think multiple flooders require a different sort of mindset and a lot of care and attention. Final point to raise is what we call an exception cases. Sometimes a lot of people say, I think my house should be eligible for FloodRe, and it's not. We have direct access into the FloodRe database, and we can quite often see that sometimes the computer says no on the FloodRe database, and we're able to support people. Quite commonly, you'll see this, for example, if a riverside home that was built in the 60s been redeveloped redeveloped and a new house built in its place, that house suddenly looks ineligible on the FloodRe database. So if you ever think that you should be eligible and you can't get flood cover, then give us a buzz, or give any worthy provider a quick call. They do have an exception case process within FloodRe that we can go in there and try and gain, and what we call an exception case, and it's a pretty kind of like, situation saving sort of circumstances that you're able to get flood cover. I think that's it, and I've talked loads. So Tracy,
Um,
questions?
yeah,
Hopefully.
there's lots of questions.
Oh
So,
God. Okay,
just
go
on
for
that
it.
exception case one,
Yeah.
there is a question here. Uh, Our property is not covered by FloodRe because we have a home and a separate granny annex that I know my
Ah,
parents in. Both flooded in 2007. We've spent thousands protecting our home and neither have flooded since. But they're not covered by FloodRe. Would that fall into something like exception cases?
yeah, it can do. And annexes are quite complex situations. And it will depend on whether the annex has a separate council tax. And if it does, it will depend on the year of build of the annex as well. But the rules can be pretty difficult, and quite often we'll still need to do a lot of double checking with FloodRe. But in essence, if the annex is on the main council tax band of the home, and that main home was built pre-2009, it should be eligible every single day of the week. If the annex is on a separate council tax bill and it was built pre-2009, it should be also eligible. It might just need two separate policies to cover it, because it has what we call two FloodRe addresses or two FloodRe ID codes. If you want help, give us Tracy, feel free to share over. That is my email address, and we'll take a look at
Yeah.
that for you. But it
Okay.
really does depend on the individual circumstances.
That's brilliant. I'll fire through some of the other questions. So, Robert asked from right at the beginning, do the figures you give relating to insurers' losses? Is that for the UK or are they worldwide?
No, they are UK market figures. They're Deloitte ABI submitted figures, so they are the market as a whole. Within those profitability figures, some insurers will perform better than others, but that is the average within the market and the UK market.
Okay. Then there's another question for Robert where he asks, what account will insurers take of defences, i.e. barriers? And I think you answered that, didn't
Yeah, I
you?
did. Yeah,
Yeah.
none at the moment. But as I say, FloodRe should look to recognise and reward people that take measures to protect their homes as things like FBCs come in. And that was always part of the original transition plan. Because that FloodRe premium is fixed by FloodRe until FloodRe do something, I don't think you will see any change on that part, but it should be part of that transition plan.
Mm. Okay, another question, which is why can't insurance companies use post-flood reports on individual properties by companies such as JBA to be able to assess the specific risk and to be able to provide more
Yeah.
accurate insurance quotes?
Yeah, so we touched on this. Insurers don't want to insure anything that has ever flooded. They just don't want to take the risk that it can happen again. I also touched on this in the point that I don't think the people that make the decision on what to set a premium at or whether to accept a risk have the specific knowledge to be able to interpret that information with any degree of accuracy. The other sort of side, guys, is if you look at some of the FloodRe premiums. If they did set the price based on their own knowledge and information, chances are it would be higher than a FloodRe premium. So there wouldn't be any absolute financial gain, I don't think, for anybody doing that. But they're just not geared as individuals to understand that. And with the best one in the world, measures can and do fail. And we've seen that plenty of times before, as much as we hope that they never do.
Yeah. Okay. And then there's a couple of flood action group questions. One that we get quite often, actually, which is we previously were offered public liability insurance for our non-flooding activities, such as monitoring watercourses, drains, etc. But as soon as flooding is involved, they
Oh,
lose interest. One insurance company previously offered us public liability for these activities, but has now said they no longer insure flood action groups. As a charity, this leaves the trustees exposed to litigation.
crikey, I'm gonna absolutely say when I do not know or I have no no knowledge to share on that one. I don't understand. What I can do is I can connect out with some people in the world of commercial and see if I can get you a response on that. But sorry, guys, it just is outside of my knowledge.
Yeah, no, that
Sort
would
of,
be really
yeah,
helpful. What I'll do
I
is I'll
can
take
try.
a note of that question and the one that's after it, which is obviously in a similar vein, and we can come
Yeah,
back on those then.
yeah. Sorry, guys. Sorry.
Okay. We were flooded on September the 26th, 24. When the council wall fell and the stream became a river, all contents either went into store or to the tip. My insurance was due on the 23rd of December, so a couple of months later. It was
Hmm.
£600 last year. The new premium is 1,977. Um,
Wow.
it's still being renovated. My broker
Yeah.
said AXA have bought into Build Back Better, I think, and I
Yeah.
have to claim that through the loss adjuster. How do I
Yeah.
find out if this is done? The broker informed me the insurance will remain high for a number of years and I'll have to pay council tax, but this is uninhabitable.
Okay, so I'm assuming it's somebody's main home. So a couple of points here. Firstly, back to my original advice, even if you're not that happy with AXA and your premium, I think the best thing to do is to stay put for now. As soon as you're back in, use your 14-day cooling off and get out and find yourself a policy that you're happy with. £600 to 1900 sounds quite a jump. From my layman's perspective, unless you're a band H home, I would say that not all of that premium increase is FloodRe. Some of that premium increase will be FloodRe. I think also we also know that AXA have changed a lot of the appetite for the types of homes that they generally want to insure, regardless of whether they're flooded. So I think what we're also seeing in this particular case is just a lot of increase in rate from AXA, and that'll be to do with AXA's profitability and what their new pricing sort of strategy and structure is. But my advice would be absolutely stay put where you are. Now, with regard to Build Back Better, that should all happen as part of the reinstatement of your property. Your first port of call is through your loss adjuster, who is effectively your project manager. bill batter should happen as part of your reinstatement. So feel free to raise it. Most loss adjusters are now pretty well versed because BBB's been in place for about 18 months. There was a period of time that I don't think they really knew what they were doing. But if it's someone big like Sedgwick's or Davies Group, they should be well versed in how that should happen. But that should all happen as part of the reinstatement of your home. You should, one of the first things they'll do is they'll do a survey, a PFR survey, and look at the measures that would be effective. And then they'll try to look at the best way of allocating that up to £10,000. I think most AXA policies are the full 10,000, but again, I'm not sure on the threshold of the claim that it kicks in it. I would imagine from what you're saying, given that your house is uneligible, is uninhabitable, that you've got a pretty substantial case and you should be eligible for BBB.
Great, thank you. And then I'll make this the last question. Any questions that we haven't answered up to now, I will respond when we send out our follow-up email.
Sure.
What happens if our insurer did not automatically renew our policy despite our request and then refused to cover us?
Oh gosh. Okay. Blimey. I think the best thing to do would probably be to request what we call a DSAR, data subject access request. And that's something you do under GDPR. It forces the insurer to take a look and share with you all the information, the communications that you've exchanged between the two of you. And it should unearth what has actually happened. The other thing would be to raise a formal complaint with that insurer to say, explain your circumstances, that you have asked them to insure. They will have a 6-week period under FCA guidelines to respond, in which case they will have to do a full investigation of the matter. I always kind of say to people, if they're not happy with things, always raise a formal complaint, because as insurance providers or brokers or insurers, we have to respond in a required mechanism. We have to report complaints and things like that to the FCA. I would also just double check that you didn't have something in your policy saying that it wouldn't automatically renew. But if you have given clear communication, I try and hold them to account and to get them to unpick and explain, why that hasn't happened or what actually has happened. They will need to investigate that. So as I say, use a DSAR and also raise a formal complaint on that perspective. If it can be any further help, then let me know. I'm
That's
happy to take some more, Tracy, if you want me to, by the way. I'm
Um,
good.
no, it's okay. We've pretty much done most of them. So
Wonderful.
thank you, Liz. Thank you so much for joining
You're
us.
welcome.
And thanks for your support as always. If there are any that I've missed, I will pick them up and Jean and I will send them out in a follow-up email. We'll also
Yeah,
send out everything else that we said we'd send out. Peter, I've seen your message. I'll come back to you in the
yeah.
next couple of days, and yeah, we can definitely have a chat. So if you have any feedback on the session, please do drop myself and Jean a note. That'd be really helpful. Any suggestions for future sessions would also be really, really helpful. Thank you again to everybody who's joined us. We'll send out a link to the recording and we'll also put it in the private Facebook group. So thanks very much, everyone, and see you again soon. Bye bye.
Thanks.